Back to one of our top stories now. The Reserve Bank is expected to keep the cash rate on hold today when Michelle Bullock heads her first meeting as governor. So just to be sure, let's check in with Scott Phillips, Chief Investment Officer at the Motley Fool. What's she going to do? Stick or twist, Scott?
Pete, I love the fact you're saying just to be sure you'll ask me. Michelle Bullock doesn't have to clear her decisions through me, unfortunately. So,
you're right most of the time. Don't undersell yourself, Scott Phillips.
Do my best. Mate, the market is expecting Michelle Bullock will sit pat. The numbers look pretty good in terms of what the RBA has been trying to achieve. And there's no real sense that Michelle Bullock is going to come and upset the apple cart. That being said, mate, bond yields in particular, and frankly, the stock market are assuming there's probably going to be another one at some point this year. Odds are firming, at least in economists and the bond market's minds, that November may be the month we need to be a little bit careful of. So, yeah, exactly. The rates that stop the nation, as we like to say.
Yes.
Yeah, there you go. First thing in the morning, mate. So look, it's going to be hopefully a non-event today, particularly for mortgage holders around the country. We know how tough people are doing it. Inflation continues to be too high. We saw some numbers out over the weekend that the amount of debt being used by middle-income households is soaring as people turn to buy now, pay later, personal loans, credit cards to try and get through. So Bullock, she's been given a poison chalice. I'm sure she loves the idea of having the job, and I'm sure she'll do a great job. But a very, very tough time with the incoming RBA governor.
Yeah, and I mean, there are some complex numbers that she's going to have to, go through today. The primary one, I think, being fuel prices at the moment, Scott. I mean, they're up 10% since the last time the RBA board met.
Crazy, isn't it? And in fact, up 14% year on year. They were lower this time last year than they were only a month ago. But the unfortunate reality is that 10% jump, as you say, month on month, means we're paying 14% more for fuel. That was the largest component of the increase in inflation from 4.9 to 5.2% when we saw those numbers last week. The RBA will look through the consumer impact of those if they believe it's only going to be volatile. The big watch out is we know fuel is so incredibly important for every part of our economy, for food trucks, going to supermarkets, for cattle trains coming down from North Queensland, tradies going to work. If and when that becomes part of the cost base of other products, that's what makes inflation endemic, and that's the real watch out.
And just on fuel, I mean, for those who aren't aware, I mean, this is basically controlled by OPEC, right? I mean, the Saudis and Russians, they've limited the amount of fuel that's heading out, to us, to other parts of the world, and fixing the prices, right? How does that work from your point of view?
100%, mate. That's exactly what's going on. So the thing for these guys, it's great for them, terrible for us. They are the lowest cost producers. What that means basically is if they set an artificial floor on the price, others are unlikely to get under that floor because everyone wants to make more money selling petrol, selling oil. If you've got it, you'll absolutely maximise your price. OPEC controls, there's the OPEC Plus too, including Russia, Venezuela and others. They control a massive chunk of the world's oil supplies. And as I said, they control the lowest cost supplies, making it really, really hard for others to undercut them meaningfully. So as that price goes up, they basically, as you said, just agree to restrict supply. We will limit supply until the price goes up. Again, completely rational behaviour, also incredibly illegal if it was done within Australia, for example. We've seen cartels taken to court and convicted for that. But if you're an international oil conglomerate and you get to set the price of something we just simply need, the cartel gets to make that call. It's a really ugly situation we're in. Look, honestly, the key thing here is it needs to come down over time. By the way, unleaded's expensive enough. Diesel is even more expensive right now. So we talk about the trucks doing the rounds around the city and around the country. It is a really, really important one, and frankly, a very painful impost on business and consumers alike.
I mean, the other thing here at the moment too, unemployment's staying low. Which is balancing everything up at the moment, Scott.
Correct, and this is the great part of it, right? We're in a beautiful position. If we're going to have another rate rise, at least from this position, unemployment, mate, I've been saying for 12 months, it is the only number that really matters for the economy overall. Rates matter a lot for individual households, don't get me wrong. But if we can keep unemployment low, people will find a way, most people, to pay the mortgage and get through this until rates come down again. If unemployment spikes, you can cut back on your spending if you've got a job. If you haven't got a job, you can't pay the mortgage. It's pretty much that simple. So that's the real watch out.
So November likely to be the next rise. As I said, Melbourne Cup Day. RBA meets at 2:30. The Melbourne Cup usually goes at about 3 o'clock. So you might have to put a bigger bet down to make up for that loss, right? Is that how that's going to work this year?
After the race, exactly.
Scott Phillips, thank you.